What's going on? It's your boy Jeremy Cash, live and direct on the Pipology channel, man. It's lit. Hey, today we're gonna talk about patterns. And not just any patterns though, but I'm gonna let them, you know what I'm saying, introduce themselves. We're gonna get into it. You know
what is poppin' YouTube fam? This your boy Bobby Will at I am Bobby Will on IG. That link will be posted down below, man. Thank you guys so much for all the support of Pipology TV. Also, thank you guys for supporting Cashflow and Chill, man. If y'all haven't been to the YouTube Cashflow and Chill, go and check that out, bro. We dropping all types of fire and gems on that mug too. But like my boy Jeremy said, today we're gonna be covering channel patterns. All right, so the market typically moves in 1, 2, or 3 directions, man. It's either gonna go up, down, or sideways. All right, so no matter which way the market is going, you can always make bread. So we're gonna show you how to identify the up channel, down channel, and the sideways channel, so you can always be making money in the market. Right. But before we get into the details, Loso want to tell y'all about his new shoes. Go ahead, Loso.
So Bobby over here mad.
I'm salty.
First off, we're gonna start with follow your boy Loso06 on IG, Los Sanders on Facebook. We talking wedges, we talking patterns, we talking all that goodness. But what we're gonna talk about right now is these J's. So Jay Hen pulled up to the crib and was like, "Hey Los, I got a gift for you, Brody." I'm like, "What's good?" He was like, "Bam, I got you some J's." Bobby wasn't supposed to see him, so he pulled up at the wrong time and was like, "Yo, Los, you got some new J's?" And I pulled one of these. Nope. Then he found out Jay Hen got them for me, so now he mad.
Bro, notice how Jay Hen got the J's on. So he rocking the Jordan 1s. You know what I'm saying? He done cop Loso the Jordan 13s. You know what I'm saying? Meanwhile, I'm rocking Air Max. What's going on?
Hey man, really good, step your shoe game up. Look. Jay Hen, my friend. He just your business partner.
I ain't really in the circle.
He ain't in the circle no more. Yo, so next video, we're gonna buy Bobby some J's, you know what I'm saying? Because he feeling a little sad, you know. But yo, we love you though, bro. We love you. It's okay.
Man, love you with some J's.
Yo, so we about to hit y'all with some real game though, real talk, man. All BS aside, we gonna hit y'all with some good content, man. We trying to show y'all how to trade these patterns in the market and be more consistent in your win rate. See y'all next segment.
Let's get it. What is poppin' YouTube family? Welcome back to this segment of Pipology TV. We gonna jump straight into the sauce, okay? We ain't finna play no games with y'all. We ain't got time to be playing in these markets. We trying to get to these bags, you feel me? So today, the topic of the day is price channels, okay? As we said in the previous section, the market is going to move 3 ways, okay? The market is going to move 3 ways, and either way the market decides to move, you can still get paid, okay? So check this out. The market is either going to move up, it's going to move down, or it's going to move sideways, okay? Now, you can do this and, spot these movements pretty easily just using up and down trend lines, you know what I'm saying? Using your support and using your resistance, okay? So essentially what a price channel is the market moving in between 2 trend lines, one representing support, one represents a resistance. And, the market usually bounces in between those zones as it's going up, and the market's going to bounce in between those zones as it's going down. And the market is going to bounce in between those zones as it's going sideways. So we're going to start with a monthly chart here, okay? We don't want to go too far back in time because the monthly represents so many data that we could be looking at what the market was doing years ago. You know what I'm saying? So we don't want to start what the market was doing years ago. We want to look at what the market has been doing over the last, 12 months, at max, okay? 12 months, maybe up to 24 months, if we see some major support and resistance levels being retested. But essentially, about anywhere from 12 to 24 months is the most data we really want to look at on a monthly chart, okay? We're going to start on the monthly chart, and we're going to just scan our way down to the M30 and just show examples of what these trend lines and what these price channels look like. Okay, so scanning back on this monthly chart, what the GU has been doing on a monthly chart is the market has essentially been moving sideways. If you look at this range that is currently in right here. All right, so let me show y'all what I mean by that. So on a monthly level, okay, and we're gonna use orange lines, okay, for our monthly. All right, for our monthly levels, okay. So as you guys can see, we got a few touches going on right in here. Looking at these candles right here, you see how the market has formed a resistance level right up here, okay? There's a resistance zone right here in this price, okay? Right here in this price range, you know, relatively around the 1.3320 level, okay? We've got a resistance zone that has formed right there, okay? Now, if we look at this from the bottom up, you can see that we have a pretty solid support level that has formed right in this region. Okay, we got a couple touches in here, we got a lot of touches right here, a few touches right here. We had the market come out, do a little false breakout right here, strong price rejection, and then market, you know, headed back up to the upside. Okay, looking at this on a monthly level, we can see a pretty clearly defined range, and you can see a market that is essentially moving in a sideways channel on the monthly. Okay, so you have the market ranging on a monthly level. Okay, this market has been ranging at roughly, that's about 1,200 pips. It's been moving up and down within the 1,200 pip range for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 months. For the last 18 months, it's been moving inside of this range. And even going further back than that, you can say it's possibly for the last 24 months. So within the last 2 years, you got GU pretty much moving inside of this range right here. And it kind of broke out back here. So you can even say, honestly, within the last 3 years, it's pretty much moving sideways within this type of range, okay? Generally speaking, within that 1,200 pip range, right? All right, so look, so that's a sideways channel, okay? And the reason we're calling it sideways is because you essentially have a swing high form right here, you got a swing low right here, you got a swing high at the exact same level, then you got a swing low at the exact same level with a little bit of a false breakout right here, okay? So check this out. Now, having that on the monthly level, we're going to start at the monthly and scan down to the M30 because 1,200 pips is a lot of pips, y'all. So when the market was doing this right here, if you look at the market on a lower level, like a weekly or a daily time frame, you're going to see that the market was actually probably moving in a down channel right here. And you're going to see that the market was actually moving in an up channel right here. So one thing about channels is it's all a matter of perspective, okay? Depending on how long you're looking to hold your trade and what type of trader you are. You know, if you're a scalper, you're going to be looking at lower time frames like the M30, M15. If you're more of a day trader, you're going to be looking at, you know, the H1, H4 type time frame. If you're more of a swing trader, you're going to be looking at that monthly, weekly, daily type of time frame and really seeing how the market is moving within those channels, okay? So starting at the monthly is never a bad idea because it's going to give you a strong sense of where those key levels of support and resistance are, okay? And give you a good perspective of what the market has been doing within the last year or 2 years. Very, very important to know that, okay? Now let's go ahead and jump down into the weekly and let's get to more of, you know, seeing what we're going to do from week to week in this market, okay? All right, so look, on a weekly time frame, we can scan in even closer and just look at what the market has been doing. I would say, again, another 10 to 20 candles, okay? Look at another 10 to 20 candles and see where the market has been doing within that week. And we can kind of start to see some more detailed patterns start to develop here, okay? So for instance, we can see here that the market was in an up channel, okay? Now we're going to use purple to identify these weekly channels, okay? But the reason why we say this is a up channel is because you got the market formed a low right here. It formed a high right here. It formed a higher low right here. And then the market formed a higher high right here. And then another higher low and then another higher high. So this was clearly an up channel. Now let's go ahead and insert some boxes here to identify our lows, our swing lows and swing highs. You feel me? You got the market came down here and formed a low. Market formed a low right here in this region. This even stretches across over here. The market formed a low in this region. You just want to look for the highs and lows. You want to look for the peaks and valleys. You know what I'm saying? This is a valley. This is a peak, right? So the market formed a high up in this region. Okay. Let's go to insert. We're going to go ahead and, we're just going to go through it. We're going to go through it. This is going to be very brief, but very detailed. Okay. So the market formed a high right here in this level. So you see you got a low, you got a high. You're going to go ahead and insert here, shapes, rectangle. Look at this. You got a higher low because this low is higher than this low. You see what the market's doing? Okay. And then you're going to insert here another rectangle. Okay. You got the market formed another high right here. All right. And then you essentially kind of had the market consolidate right here. The market essentially consolidated right here, but it did form another low. You can clearly see another low that was formed, which is another higher low, low, high, higher low, higher high, higher low, higher high, another rectangle. Okay. So boom. We're going to go a step further. We're going to even add some text boxes here because I want this to be very clear, okay? I want this to be very clear what we're looking at, all right? So this would be a, you feel me, swing low, okay? And then we're going to go in here and say insert, you feel me? This is going to be the swing high, you feel me? So we got swing low, swing high. Then we got a higher low, so we're going to call that HL. Okay, for higher low, insert text box right here. We're going to call this HL for higher low, HL, okay? And then we're going to insert another text box right here. We're going to call this HH for higher high. This is all the up channel right here, okay? Call that HH for higher high. And then we're going to do another insert, more text right here. And we're going to call this one again. This is another HL for another higher low. And then we're going to go and insert up here, do another text box right here. Boom. This is another HH for a higher high. So we got the market forming a series of, and I call this a swing low because it's just the first one. So this is swing low, swing high, higher low, higher high, higher low, higher high. Just so y'all can clearly see what we're illustrating with this, right? Now what we want to do is go ahead and come across this bad boy with some trend lines, okay? So we'll start at the lows, okay? So we're going to start at the lows and work our way up, okay? So we're going to go lows, you feel me? And the market's forming lows right here. So these are our lows, all right? And let's go into our, let's look at our objects list because I want to make that line like a lot thicker than that. So that trend line, we're gonna go to the visualization of it. All right, so the red is cool. Now let's go with a different color. We're gonna do purple at this level, okay? So we're gonna do purple and we're gonna make it like thick so we can clearly see where that line is sitting at. So that's the first trend line right there, okay? And then for the channel, you want it to be, basically within the two trend lines. So the second one is going to start right here because this was our swing high and it's going to go up and touch our other highs. So we had a high right here and then we had highs up in here. And it's not going to be perfect. I mean, generally speaking, you want these lines pretty much parallel to each other so you can kind of clearly see where this channel is identified. So this would have been kind of a false breakout out of this channel right here. But the price is generally staying inside of this channel right here. But even with this breakout, given that we're on a weekly time frame right now, you probably actually still could have made money off of that breakout because it's probably a lot of pips. Keep in mind, these are weekly candles. Yeah, so the market broke out for about 100 pips. So even if you were trading the breakout of this channel, you would have still made money on that breakout. So let's go ahead and jump down now to the D1, to the daily time frame, and we already put our references there, so we know about where we at. You can see it. You can see the channel. You see the price is like basically bouncing up and down within this channel right here. So you got price lower here, boom, higher low here. You know what I'm saying? It basically kind of broke out of the channel right here. Broke out of the channel just slightly right there. Then right here is within the channel. We got our up channel right here. This will be an up channel. This is how you basically want to trade a channel pattern. When you're trading a channel, you're basically looking to see which direction the market is headed in. And you want to first identify whether the channel is going up or down or sideways. The way you do that is by looking at where the swing high and swing low is, and you wait for the market to form a higher low. So essentially, if you're looking at this on a daily time frame and you see the market do this, the market comes down, does this swing low right here, comes up, forms a swing high right here, comes up and forms another higher low right here, and this low is higher than this low, that's a pretty strong indication that the market is headed into an uptrend. Okay, I'm gonna give you guys another little piece of game right here. Another thing that gave us a strong indication that the market was going to stay into an uptrend right here is that you had this daily candle was a strong momentum candle. This was a bullish engulfing candle. Anytime you have the market form a swing low, and then a swing high, and then you have a higher low, basically you had a market forming a base that's higher than this one, and you had a bullish engulfing candle right here, that is a very strong indication that you are in an up channel, meaning that the market is going to continue into an uptrend, okay? But how do you know when the uptrend is over? We're going to get to that in a second. But right now, you can see that the market is clearly in an uptrend, okay? With this bullish engulfing candle right here, the market's trending up, right? So, essentially, you could have got in on this very next daily candle, okay? Now, what you want to do is you want to place your stop loss right below this previous low. So this is definitely a swing trade. You're looking at a pretty big stop loss on this, okay? This is like 200 pips to catch this trade, okay? This is a very, very high risk trade. But you're essentially looking for the trade to touch the top of this next channel, okay? So you would be jumping in right here, riding this trade up to the next zone, which is the top of this channel, okay? Typically what you can do is, you know, set a risk to reward ratio of a 1 to 2, 1 to 3, 1 to 4, that type of deal. This would have been good for a 1 to 2.5, 1 to 3 risk to reward ratio. Usually, you know, anything better than a 1 to 2 is pretty good. So getting a 1 to 2 risk to reward ratio here is perfect. 1 to 2 risk to reward ratio, meaning that your risk is going to be determined by where you place your stop loss. So if your stop loss is 200 pips, 1 to 2 means you're shooting for at least 400 pips to the upside. And this is a swing trade, so keep that in mind. You know, you're going to be risking more pips on the swing trade to gain more pips. So generally speaking, you're probably just going to be using lower lot sizes so that you're not over leveraging your account. You still want to keep, you know, use a low percentage of your account, less than 5%, you know, somewhere between 2 to 3% is usually good. But you want to keep that risk relatively low, so you would probably just use a lower lot size. So the advantage of swing trading is that you're holding those trades for a longer period of time, so you're not consistently just checking your phone, or checking your computer to see how your trade is going. You're basically just looking at it on more of a daily or hourly type of level, okay? All right, so boom. So this trade would have been good to hold for about a week, and you would have hit your take profit. You know what I mean? Easily hit your 400 pips in profit. That's basically what we'd be looking for in an up channel. So generally speaking, if the market is in the up channel, you can catch sales at the top of the channel. And it's not necessarily a bad idea to sell at the top of a channel, but to me, it's a higher probability jumper to basically look for the buying opportunities. If you know the market is trending up, you got a higher probability of catching the buying opportunities. Now with this one, this was actually pretty unique because you had the market touch the top of the RSI here. So this probably would have been a pretty good sell, especially having this bearish engulfing candle. This basically created an evening star pattern. which we'll talk more about candlestick patterns in a later video. But this evening star pattern gave you a clear indication that the market was going to head down. And so you had a good opportunity to know that, you know, you basically follow this trend line, catch the sell right here, and then sell the market down to here. Again, guys, it's all about finding the high probability jumpers. You know what I'm saying? Nothing in Forex is 100% guaranteed. The way you increase your win rate is by finding high probability setups, okay? If you're trading with the trend, it's high probability, okay? You're trading at the RSI key levels with price action, it's high probability. If you're trading at RSI key levels with divergence, it's high probability, okay? You're looking for high probability jumpers in the market. That's what we're doing every single time, okay? So that's basically looking at the market in an up channel, okay? We can scan down to the H4 and even go on down to, you know, even deeper to the H1, but we pretty much seen what we need to see on this up channel, okay? So what we're going to do is let's jump back into the weekly time frame, okay? Let's jump back to the weekly real quick, okay? And we're going to look for the market moving sideways, okay? Let's look for a sideways channel, okay? Let's look at it on a daily time frame. Let's look for a sideways channel, okay? And here we go. We got one right here. How do you know when you're in a sideways channel? You know when you're in a sideways channel based upon the market forming, not forming a lower low or not forming a higher high, okay? And I'm gonna show you what I mean by that. It's basically like the market forms a support level, okay? So look at this, for example. So the market broke out of this channel right here, okay? It broke out of the channel, okay? It came back and retested. This is how you know it's a real breakout, okay? You usually, when you're trading a breakout, you usually want to wait for the retest, okay? So the market broke out of this channel, came back up, retested it, and continued down. So this is how you know this is a real breakout, okay? So our first swing low, okay, is right here. This is where the market first formed its base after it broke out of the channel, okay? So this will be our swing low. So we're basically going to come in, let's use a different color here so we can, you know, distinguish these lines. All right, so we'll put this as orange right now, but we're going to come back and go into our objects list and change the color on that one. All right, so that's this horizontal line right here, and we're going to make this turquoise. All right, so boom. So look at how the market formed the first swing low right here. Then the market came up and formed a swing high right here. Then it came back down and formed another swing low right here at the same level, okay? This is a strong indication that the market is moving sideways, okay? Especially because the market has not overtaken this high right here, okay? So we're basically going to start our resistance level. Our resistance level is going to be right up in here. And so the market is basically moving sideways within this channel. The market's moving sideways within this channel. Now we could always bring another line in to kind of tighten that up to where our first swing high was. So right up in this level right here, you see? So the market's moving sideways within this channel, okay? That's a sideways market, right? Now, again, you see how the market came in and did a breakout right here. This would have been a false breakout, okay? First of all, I didn't ever come above this high. Secondly, when you see a breakout, you typically want to wait for the retest. When you see the breakout, you want to wait for the retest, okay? Where would the breakout have been on this channel? Okay, let's jump back over real quick. So on this channel, the actual breakout happened right around here, okay? The reason how we know this is the real breakout is because why? Because it has the retest. It went in and retested this zone right in here, and then it came back down. All right, so this would have been the good entry for a breakout trader. And it also had a bearish engulfing candle right here, okay? This was a very strong indication, very strong entry for a breakout trade. And it was good for essentially 150 pips, okay? So for a breakout trade, you would have placed your stop loss right above this zone right here. So your stop loss on this one was roughly, it's only roughly about 50 to 60 pips. And so 1 to 2 risk to reward, you were looking for at least 120 pips. and you smash that, you would have smashed your take profit within 2 days. You see what I'm saying here? You guys see the number in the middle is the number of pips. So if you had to place your stop loss right above, this zone in here where the market formed this little peak, place your stop loss right above this zone, above a green candle, and then set your take profit at, a 1 to 2 risk to reward ratio. So boom. So this is the market moving in a sideways channel. You can make money inside of the sideways channel by essentially looking to buy at support and sell at resistance. This is what Jeremy talks about when he talks about the M's and W pattern. The M's and W pattern work best when a market is going sideways because it's bouncing up and down between support and resistance. So when it comes down right here, bounces right here, forms a swing high, this is your W right here. You see that? This is the first leg. It went up, came down. This is the second leg of the W. You see that? So when the market is moving sideways, one of the best strategies to trade with is the M's and W's. You trade the second leg of the M, the second leg of the W when the market's moving sideways. Now, let's look for an example of the market moving in a bearish channel, okay, in a down channel. This would be one right here. This was a strong price drop. So for this one, what I'm going to do is I'm going to zoom in, create some markers where we can kind of see where this is going. So let's create a marker, okay? We're going to put a swing high right here to mark this level. And then we're going to put a swing low down here to mark this level. Insert shapes, rectangle. Boom, swing low to mark this level, okay? Because what happens is the market was moving so steep on the daily. It moves so sharp on the daily that it's better to look at this on a lower time frame. And we're going to skip the H4 and just go straight to the H1 on this one, all right? So we wanted to mark those levels right there so we can have a placeholder to know where we're at. And then we're just going to mark those levels. We're going to come down to the H1. It's all going to make a lot of sense when we zoom out and get back to that time zone. We can look at it on the H4 and see just as well, pretty much that we have, a series of, swing highs and swing lows. Basically we have the market formed this first high right here. It came down and formed a low right here. Came back up, formed a high right here. Came back down, formed a low right here. Formed a high right here, a low right here, a high right here, a low right here, a high right here, and just continue down, okay? So this is an example of the market clearly being in a down channel, okay? So when you have the market trending down like this, let's basically start with our trend lines again. So our high was right here. You want to find the lows basically right about up in here. So we had the market forming highs and lows, and then you got your swing low right here. This one's a little bit harder to draw out because the fall is so steep. We might need to try to find a better example. This is actually a better one right here. Yeah, let's look at this one. This is a better one because you had a market that's actually trending. All right, so look. So let's go in here and let's start from here. And you see how the market has its highs. Boom, so we got the highs right there. And then we got our lows up in here. We'll start it from right about up in here just to get the angles right. Object list. Horizontal line. I'll delete that bad boy. Alright, so come over here, trend line. And then basically our trend line is like this. So you guys can see right here how the market is in this down channel. You see? The market forms a high, it forms a low, it forms a high here, forms another low, and then look, when it gets to the top of this channel, it continues down. It gets to the top of this channel and continues down. So when you're in a down channel, it's best to look for selling opportunities. So we saw the market coming down, it's barreling down this way. When it formed this high, formed this low, formed this high, formed another low. When you see that this high, okay, when you see that this high right here does not go higher than this high, then that is a strong indication that the market is still in a downward channel. And then you got a bearish engulfing candle right here. So once we got that bearish engulfing candle, we place our stop loss above this green candle. Y'all gonna start to see this. You see the high, the low, the high, the low, then you got a high that's lower than this high, okay? And then you had the market form this bearish engulfing candle right here. So your entry on this, the perfect entry on this trade would have been after this bearish engulfing candle. So your entry would be right here. Your stop loss is at the top of the channel. So this is still like a swing trade here because you got to set a pretty high stop loss. So you're looking at a stop loss being somewhere between 70 to 90 pips right here. But then you're trading this down to the bottom of the channel. And you're looking for about 140 to 180 pips. And you got it right here at the bottom of the channel. Right at the bottom of the channel, you hit 180 pips. So generally speaking, you guys, having a 1 to 2 risk to reward ratio is good on the channel trading. And like I said, we'll jump more into price action later, but I just wanted to give you guys this little bit of sauce to add to your favorite strategy. So say, for example, you see the RSI being overbought or oversold and it's at the top of a channel, you know, of a down channel, then that gives you a strong indication that it could be a great buying opportunity. Say you get a divergence at the top of a channel. Same thing. It's a strong indication that, the first one was a selling, so a strong selling opportunity. So you guys can take this, kind of dissect it, watch it a few times, you know, start looking for the swing highs and swing lows, identify if you're in a market that's moving up, down, or sideways, and then look back on this, reflect on this, and see how you can better position yourself to make better trading decisions and shoot high probability jumpers. That's what it's all about, you guys. That's been it for this segment. As promised, we are doing a Cash App giveaway on this video. We're not going to do it live on the video because we don't want to extend it. But when you get that Cash App delivered to you, when you get the Cash App, when you win the giveaway, you get the Cash App to you, please comment down below the video. Let people know that, you know, you actually got your Cash App money. You know, we not just we not just capping about the Cash Apps. That's been it for this video, you guys. Like we always say, let's trade together, win together, grow together. Let's go.